Hello and welcome to Ticker Tapes. Today, we're taking a look at the world of high growth stocks. High growth stocks came to the fore once again last week. Earnings season has by and large surprised to the upside, and brokers Wedbush, who cover many growth stocks, wrote that economists, tech perma-bears, and many other market pundits have watched in disbelief as one by one, tech earnings and guidance across the consumer and enterprise landscape was relatively healthy, with some cautionary signs, but clearly not the guidance Armageddon expected by the tech skeptics. And when good news is delivered, the price performance of high growth stocks can be extraordinary. For example, collaborative software provider Atlassian reported in-line earnings, which included cloud revenues, which grew by 55% year over year. Atlassian also appointed former Microsoft executive Joe Binz as its new CFO. News that helped to drive Atlassian's stock price higher by 28.32% over the last week. Latin American e-commerce business Mercado Libre Inc. blew past Wall Street's estimates, posting Q2 EPS of $2.43 compared to analysts' forecasts of $1.79. Its stock price jumped by 25.94%, and Credit Suisse raised its price target on the name to $1,470, more than $400 above the current share price. The company is said to be benefiting from investment in technology across Latin America, allowing it to generate and fulfill increasing sales in the region. In the 3 months till the end of June, net sales jumped by 53% to $2.6 billion when compared to a year earlier. Operating margins have been squeezed, however. They fell far less than Wall Street anticipated, coming in at 9.6% versus forecasts for a figure of around 7%. Over the last month, the average NASDAQ 100 stock has gained 11%. That begs the question, did high-growth investors have a better insight into earnings season and the health of the wider U.S. economy than the rest of the market? After all, the rally in NASDAQ 100 stocks started on June 16th, and since then, the U.S. economy has created nearly 1 million new jobs. Despite NASDAQ's recovery over the last month, the valuations of privately held high-growth investments continue to fall, forcing large venture cap investors to take huge write-downs. None more than Japan's SoftBank, which announced a $23 billion quarterly loss at its Vision Fund VC business, part of a $26 billion loss for the group as a whole. SoftBank has sold its stake in ride-hailing app Uber and is looking at reducing headcount in its fund management business to try and cut costs, though clearly any savings it makes here will be a drop in the ocean compared to losses of that magnitude. SoftBank did manage to sell its holding at Uber at an average price of around $41.47 compared to Friday's close of $32. SoftBank founder and CEO Masayoshi Son said that the world is in great confusion, and he admitted that the Vision funds had put too much money into startup businesses that had inflated valuations. The company will now tighten its investing standards.